all of these four, specifically these four candlestick patterns on the charts. One is this inverted hammer candlestick and the hammer, right? Both look same, but the other way around, right? So the hammer looks like a hammer, and that inverted hammer candlestick means the other way around of the hammer pattern. And both of these patterns occur in the end of a downtrend, and signals a potential reversal, right? And also so these hanging man and shooting star are same as hammer and inverted hammer, but they occur in uptrends, right? So when you see a hanging man during an uptrend, that means there could be a reversal, right? That means a start of a downtrend, right? So if you are in an uptrend, you might see this one at the top of the trend, and after that there might be a reversal. And this looks like a inverted hammer, right? Like this one. And if that occurs in a uptrend, after the uptrend, you might see this at the top of the uptrend, right? After that, you might see a reversal. We also discussed that with context. That means we have to support and resistance and volume. Like that, we have to use other technical tools to confirm these candlestick patterns. Otherwise, there's no point. You can't just rely on this candlestick pattern just by looking at it, right? You have to support that by the other technical tools we use, right? So I'll start from here today. So the spinning top looks like this one, right? So it has a short. First of all, I'll go to the four components of the candlestick first. So I'm again explaining what we have discussed last week, right? So in a green candle, that means starting point of this body, right? At this point, and the closing price means the top of the body at this point, right? These two wicks at the top and the bottom are called shadows, and we can also call this upper shadow or the upper wick, and this wick bottom of the body we can call it lower shadow or the lower wick. And in a red candle, right, the opening price is at the top of the body right here, right, and the closing price is at the bottom of the body right here. And again, we also see the wicks at the top and the bottom. These are called shadows. The upper shadow, you can call it upper shadow or the upper wick. This one we can call lower shadow or the lower wick, right? So in the spinning top, we see wicks at the top and the bottom and with a small body. So we see a short body, right? Like this. And this can be also bullish or bearish. Bullish means it can be green, right? Bearish means it can be red. The difference is that body is short, right? And there are two long wicks at the top and the bottom. That means upper shadow or upper wick and lower wick or lower shadow. There are two long shadows, right? And here also you see two long shadows, and this is called spinning top. This also occurs in this also marks a bottom or the top of the current trend, right? If it's an uptrend like this, if you see this in spinning top at the top, you might see this in a top of the uptrend, right? Then you might then it will be followed by a downtrend, right? And if you see that same thing but a bullish candle in the same uptrend, that also marks the top of the uptrend. So it basically means an indecision between the buyers and sellers. That means the buyers or the sellers don't have a clear conviction as to where the market is heading next. So this can also occur in a downtrend as well. Well, it also means a potential trend reversal. If you see this, that means a potential trend reversal. But again, you can't just rely on this. You have to use the support and resistance line and other technical tools. So we'll I'll try to discuss about support and resistance line maybe at the latter part of the session if we have time, right? So we are discussing about single candlestick patterns now. So the main ones are these five, right? Doji, hammer, these six: doji, hammer, inverted hammer, shooting star, hanging man, and spinning top. So we discussed all of these, right? And we didn't discuss about the doji, right? Doji is something like this one, right? This is called a standard doji, where you see no body, or you can call it a flat body, right? So that basically means the opening price and the closing prices are same, because body means opening price and the closing price, no, like this. The body means opening and closing price. Opening in a green candle body, the bottom of the body means opening price. The closing of the body is at the top of the body. Sorry, the closing price is at the top of the body, right? So the body basically means opening and closing price, right? In a doji, opening price and the closing price is same, right? That's why you have no body. It's like a flat pan. It's a flat body, right? So this is a doji. So in dojis there are like different types, right? So this is called a dragonfly doji, where you see a longer tail or longer lower wing, right? And not a short body. It's a flat body, right? This one is a short body, right? There's a difference. This is a short body. This is a short body, right? This is actually flat body. The opening and the closing price is almost same, right? Not exactly same, almost same, right? And this is called a gravestone doji, right? Where you see a longer upper wick, right? And flat body. Here you see longer lower and here you see both longer upper and lower wicks, right? This is a standard doji, but the wicks are not that lengthy like this one. The long leg means, as the name suggests, there are long wicks, right? So there can be long wicks to the upper side and the lower side, right? Okay. So what does this dojis mean, right? Basically, doji, if you see a doji in a trend, right, it marks a potential reversal, same as before, right? It can happen in a uptrend and downtrend, both. Okay. So if you see a doji in an uptrend, that suggests us there could be a potential reversal, but you can't make a decision just based on that. At least you have to confirm that by the next candle. You have to wait for the next candle formation, right? And you can see here what happened was, after this doji, there's a bearish candle. Then there could be a potential trend reversal to the downside. That means a start of a downtrend, right? And here also, you have to wait for the next candle formation. And here, after this doji, you see the candle is green. That means a bullish candle. So it probably means there could be a bullish reversal, right? So these are called bullish and bearish reversals. Here you might see a bearish reversal after you spot this on a chart. Here it could be a bullish reversal, right? And here this gravestone doji almost every time happens in a uptrend. So if you see this gravestone doji, that's a very strong signal that the price could go down from that point, right? This gravestone doji. Gravestone means you know what gravestone means, right? So it's like the death of the price movement to the upside, right? So if you spot this on a chart, there could be a bearish reversal, but still you have to confirm with the next candle formation. So here you can see it is a red candle now. Then we can confirm the bearish reversal, and also you have to use other technical tools, like if you see this in a resistance line, then it's a very strong signal, Here also you have to confirm with the next candle. But guys, always you have to use it with context, right? We'll discuss it more. So I also marked some of the dojis in a chart. Let me show you. I marked them on in the 4 hour time frame. Okay. Here you see dojis, right? Here, these are two dojis, right? And it happens, it occurred at the end of this downtrend, right? This marks the end of the downtrend, and after that you can see the price has gone up to price is reaching out to this top of this or the start of this downtrend, right? This point price is reaching there after this downtrend breakout, and before that downtrend breakout you see the two dojis at the bottom of the trend, right? This is the trend, which is a downtrend, right? This is downtrend, right? And at the bottom of the downtrend you see two dojis, and that is a potential, that tells us a potential reversal, and after that you see the trend line breakout with high volume. Here it's high volume, this is the breakout candle from this trend line, and you can confirm that the trend has reversed, and also you see the dojis at the bottom of the downtrend, and also here also you see dojis, right? And that's also a reversal, and at the top of the trends also you can see dojis. Here you see, so this is the starting point of the downtrend, this is the starting point of the downtrend, right? The trend line I marked, this is the start of that trend line, and here also you see this doji, right? This candle is the standard doji, right? Like this one, and that marks the trend reversal. So this was is an this was in an uptrend, no? Like this in the 4 hour time frame. Okay, the 4 hour time frame, it was in an uptrend like this, and at the top of that uptrend you see the doji, and it is followed by a red candle. So that is a reversal confirmation, right? This is a doji. So you can actually spot many of these candlestick patterns on the charts. You can do it by your own, right? Try to spot these on charts, and also define the context. Context means this should be a resistance line, right? We'll discuss it in a bit about the resistances and supports, but this is a resistance. I can mark a resistance like this because the price has rejected from this level before, right? When the price approach that level again, we can again expect a rejection from that point. So here you see a resistance point as well as a doji, right? That is a very good signal that price could go down from that point like this. Okay. So that's about the dojis, right? So there are like different names for dojis, but they all mean the same thing. There could be a potential reversal. You have to confirm it with the next candle, like this one. Here also you have to wait for the, here after you have seen this doji, you have to wait for the next candle formation, which is this red candle. That is a bearish candle. So the potential reversal is a bearish reversal. So the price has gone down. So let's try to look at here also. What is this called? This is a long, it's a dragonfly doji, right? Yeah, it's a dragonfly doji, but basically a doji. That means the price will go up from that point, right? It's not at the bottom of this trend, but it after this point, you can see the price has gone up because the price was coming down like this now. Here you can see the price is coming down. Price is coming down like this, but this, and you have to wait for the next candle formation, which is a bullish candle or a green candle, right, like this. So that gives a entry point for a long or a buy position. So this basically doji basically means a potential reversal, and that reversal direction depends on the next candle formation. Here the next candle is the, or the subsequent candle is the green candle. That means the price could go up from that point, after that point, like this. And here you have seen a doji, and the following candle is a bearish candle or a red candle. After that, you may expect the price to go down like this. It's easy. A doji is at the, usually means a potential reversal, but you see dojis here, right? But they don't mean anything. You don't see a price reaction from that point. That's why you always have to use them in context. Like this one I marked here is a very good support line. This line, this marked line I marked before, right? But this is a support line. We'll discuss. Don't worry about support and resistance now. We'll discuss that. But this is a support line, and when you see a doji at a support line, because this support is a key level now. So if you spot dojis in key levels, they are the strong signals, right? Only they are strong, and you can rely on them if you spot them in key levels. So always need to use them with context. Okay. Any questions, guys? I mean, there are like a lot of candlestick patterns now. You don't have to remember all of them. The most important tool we can use is the support and resistance. But to confirm that support or resistance level is important, we can supplement.
நீங்க ஓகே அண்ணா போவீங்களா இல்லையா?
Sorry.
இல்லைன்னா மறந்த பாருங்க நான். ஓகே 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 தேங்க் ஓகே.
Vijayaraja, you are unmuted.
Oh, sorry.
Okay. So if there are no questions, we'll proceed. So here is also a guideline how you can trade with dojis, right? Here also it says doji at the peak of an uptrend. It can also happen at the bottom of a downtrend, right? Basically, it means a potential reversal. And we have another single candle pattern, which is called Marubozu. So these are Japanese names, right? Because we earlier discussed these candlestick patterns first introduced in Japan. So these are like Japanese names. It's called Marubozu, right? Here in the Marubozu candle, you don't see any wicks, right? Only see the body. That means this is the open in a green candle. This is the opening price. This is the closing price. You see no wicks. In a red candle, this is the opening price, this is the closing price, and there are no wicks. That means the price closed at the lowest point, and it basically suggests us that the sellers dominated that time period. Here the buyers dominated that time period. This is a continuation signal. So here, earlier what we discussed was reversal signals. So these are reversal signals. All of these are potential reversal signals. Here, this Marubozu means a continuation signal. So if we can identify a, let's say, uptrend, in an uptrend, if you see this candle, that's a confirmation of the uptrend continuation, right? That uptrend can continue for some time if you spot this on the chart. And if you can see this in a downtrend, that means a downtrend continuation, because at this point the sellers are dominating the that particular session at that particular time period, right?
Can I ask a question, sir?
I mean, it's very hard to spot these on charts, right?
Sir, can I have a question?
Yeah, sure. Go ahead.
Can you please more elaborate on
You are muted.
can
Sumit,
you
right?
please, yes,
Yeah,
can you please elaborate on more in Morobosu candle? What does it mean by sellers dominated and buyers dominated?
right.
Two different things.
Here you see this is the price in a, let's say, look at the green candle here. So here what basically means is the price closed at the highest point during that particular time. That means there is no selling pressure at all, right? Because the candle didn't go down a bit, at least a bit, because there's no selling pressure. So this is like a very strong green candle that confirms a bullish continuation, or that buyers are entering, and also this is the also this signals as the buying pressure, right? So there are no selling at all if you see that on a chart.
So if we put in
So
this context, sorry to disturb you, that means that particular share price has a very good demand. That is why buyers are willing to buy that thing, or little bit.
the thing is, you can't actually spot these on charts because these are very rare, right? If I look at these charts, you can't actually see a textbook Marubosu candle at any point, right? You have to spot a candle with no wicks, but there are no candles like that, right? So you don't need to actually, dig deeper into this Marubosu candle because it's very rare, right? You might not see them at all because even I think Bitcoin may have some.
But in other candles also, except Morobosu candle, other candles also, if there is a big that means there's a domination from buyers and sellers.
Not domination. There is buying and selling happening at the
Pressure.
same time.
No,
Yeah,
no.
usually
Out
there are
of
buying and selling happening at all times. No,
yes, no.
here this means only buying happen and it has dominated the all the selling pressure. That
Yes,
selling pressure is absorbed with the buying
correct.
power, right?
Yes. So, apart from
You
this,
may not spot this on the charts at all. I
no,
mean,
apart from this Morobosu candle, as you mentioned, it is a very rare situation. But in other
yeah,
candles also, we can see tall wicks, short wicks, and uh, different wicks types.
yeah.
Then does it means that does it domination from buyers or domination sellers? Apart from Morobosu candle, can you elaborate more on other candle types? What is mean by buyer dominated situation and the seller dominated situation? Can you hear
Okay,
me?
so yeah, here a doji means no one has dominated the session. Basically, a indecision between buyers and sellers. So buyers and sellers have no clear conviction as to where the price should head next. That's why we are waiting for the next candle formation. If you spot a doji, then after that you can confirm the price direction, because here it's an indecision, right? After that you might see the bearish candle, which is the red candle. Then you can say the price might head down next, right? Like that, this doji is a indecision between buyers and sellers. And if we look at here, you can see that. So you can actually think of your own about the selling and buying pressure by looking at this the body formation. So here also what you need to clearly understand is the formation of the candle. So here in a green candle is opening and closing price. No, the body means opening and closing price. The other wicks means high and the high and the low price. So here, if you look at the doji, the opening price and closing price are the same. That means no one has dominated that session, right? Like that, here also you see a lot of selling from this point, but the buyers have they can actually hold that selling pressure. That's why this body formation right here. I can't explain like very clearly how you can think of it, but that the whole price and whole demand and supply dynamics are forming these candles, right? And that's why we have these patterns. These are like very established patterns, and by looking at these patterns, that's why we can say where would the price head next, by looking at the formation of the candle, right? Here also, why you see this long wick? Because sellers are selling at this point, but why you see this body? Because buying pressure was there to some extent, and they could actually hold that selling pressure. That's why the body is there, a short body is there, like that. I mean, you might not understand it like very properly. I mean, I can't actually explain you that, but this is how you can, by looking at the candlestick pattern, you can actually get a price direction.
Yes, it is a very tricky things to understand because it gives a lot of information. We'll
Yeah.
try. Thank you very much, sir.
Okay. So here is also a clear guide how you can use these candlestick patterns. And here you see the stars now. These stars means the strength of that particular pattern. So here you see one for spinning top. That means these are, if you even if you spot a spinning top, that could be a weak signal. That's what this 1 star means. 2 star means moderate strength. 3 star means high strength. That means if you spot a hammer, like how I told you before, then hammers are usually a strong pattern. Right? These are like very weak patterns. The spinning tops are weak patterns. These are moderate patterns. Hanging man is a moderate pattern. Shooting star is a strong pattern, right? That means if you spot a shooting star on the chart, there's a high likelihood of trend reversal. Right? You spot shooting stars on the uptrend. We can see a shooting star. I think I showed you shooting stars last week. No? Yeah, here, this is a shooting star. And that happened near at this resistance level, previous resistance level, not exactly at that, but closer to that level, right? So this is also a resistance level because price has gone down previously from that point. And when the price approached that level again, we can expect a rejection or the price to go down back again, right? And at that point, and at that same point, you also spot a shooting star, right? This is a shooting star. This is a shooting star where you see a long upper wick and short body, and also a short lower wick or no wick at all, right? In this case, it looks like same as this, right? This is a exact shooting star candlestick pattern. And at that point, the price has reacted very quickly, and you see the price movement, right? Here, it's a massive price movement. And it happened at this resistance point, and the following candle, the subsequent candle is also a bearish one. that means a reversal of the previous trend, which is this, the price was going up, no? So after you spot this, the price has gone down, basically a reversal, right? So these are all of these are like reversal signals, except for this Marubozu. You may not see this on charts at all, right? So don't worry about this one. And so up to this point, what we discussed was the one single candlestick patterns, right? So this was I was planning to do this all of these in the previous session, right? And today I will be doing this fourth session where we will discuss about the two candlestick patterns, double candlestick, what is called two candle patterns. So in the fourth slide, I have planned to discuss about candlestick charts, specifically the two candlestick patterns and the three candlestick patterns. And also we have to discuss about point and figure charts. Right? That's also a chart type like line chart, bar chart, candlestick chart. So previously we discussed that, no? Previously we discussed about line charts and also the bar charts and candlestick charts. So I said candlestick charts are the most important one. And there's another type called point and figure charts. That's somewhat important, not that important as candlestick charts, right? But anyway, we'll discuss it. So we'll look at two candle patterns, right? So this is the easiest one you can spot. This is bullish engulfing, bearish engulfing. What you basically see is so you can see the red candle here now. Here, the subsequent candle completely outperforms or overtakes the previous candle movement. So here, if you look at the red candle, the price opened at this point, right? And the price closed at this point. Okay, so the subsequent candle is bigger than that, right? Subsequent candle is bigger than that, and it's a green candle. So previous one is a red. Here you can see the candle one. We call it candle one. This is candle two. Okay, so the candle two completely overtakes the candle one movement. Here opening price was this. Here the closing price was this, and the second candle's opening price is lower than the previous one's closing price, but it's higher than the previous. The second candle's closing price is higher than the previous candle's opening price. Like that, it's bigger than the previous candle. That's a bullish engulfing if the second candle is green. If the second candle is red, that is a bearish engulfing. So this is somewhat of a strong candlestick pattern. That's why I have this 3-star rating here, right? So these are very common. Okay, so you may spot them on the charts very frequently, right? I mean, I'll also give you guys a trick how you can spot these candlestick patterns at once, right? So in TradingView, if you go to indicators and if you type all candlestick patterns, here in under the technicals, you can see this all candlestick patterns. Then you can add that to the charts. Right now, I have added them to the chart. Okay, why is it not coming? Here. So in my free version, that shows up to a certain point, only up to this point. The historical data is limited in the free version. That's why it shows only up to this point, right? So this BE means bullish engulfing. This red one means bearish. Red BE means bearish engulfing. This blue BE means bullish engulfing. So here, let's look at the candle. Is it an engulfing or what? Right. So this is a engulfing candle, but that is not what I'm expecting. Wait. So I'll again remove that. Right. So I'll show you an engulfing. So this is an engulfing, right? You see the green candle. This is a bearish engulfing, and the subsequent candle is completely overtakes the previous candle's price movement. Here, the green candle opened at 95,090 and it closed at 95,360. The second or the subsequent candle opened at the same price level that this one closed and closed below the previous candle's opening price, right? Like at this point, it closed at this point. So it completely reversed the previous candle's price movement. So in the previous candle, the price has gone up from this point to this point, and this engulfing candle has gone down beyond that, completely reversing this one, right? That is a bearish engulfing. So what does that tell us? Bearish engulfing also means that price could go down like this. Here you can see the price is going down, and this is also a engulfing where you see the green candle completely overtaken by the red candle. The price has, so the red subsequent candle is bigger than the first candle. And you also, if you add this one, the chart indicator, then also you can see these engulfing patterns, right? So this is a bullish engulfing where you see the red candle or the first candle is completely offset by this green candle. The red candle price opened here, closed here. The green candle opened here and closed above that previous opening price, right? So that is called engulfing. Completely reverse the previous price movement. That's what meant by the engulfing. Okay, and here also bullish engulfing, but if you see them like at these points, they don't mean like they don't give us any important signal, because you have to use them with support resistance lines and with context, right? Here you can rely on this bullish engulfing because it's closer to this support level. This is a support level. So, and you see the doji at this point, right? You see a doji, and then you see a engulfing here. Here is the bullish engulfing, right? So that's a confirmation of the uptrend or the price, that the price could go up. Here also a doji, right? And the price is going up. This doji means the reversal of this price movement to the downside, right? And this is a spinning top. Do you remember spinning tops? That also occurs at the that also means the potential reversal. And after that spinning top, you see this upward movement is done. This upward movement is done, then a downward trend or a movement has started, right? Again, what is this? This is a inverted hammer, right? But here the price movement is very minimum, right? Inverted hammer also means a potential reversal. That means the price should go down, right? But at this point, price didn't go down that much. Gone down a bit, but not that much. That's why you always have to use that with context. Here the volume, you have to check volume, other indicators, and support and resistance. Also here there's a resistance line, right? But this line was more important than that at that point, and this one also a resistance, and this one is also a resistance. But here the price rejected, but again bounced back up because the price is in an uptrend, right? Here you can see the uptrend. After this point, the price was, you can draw this uptrend line, and after this the price has reversed and now it's a downtrend. Again an uptrend has started after the breakout of this downtrend. Like that, you have to always use downtrends, uptrends, again candlestick pattern, support and resistance line, always together, right? You can't just rely on a single candlestick pattern, right? After this top of this trend, you also see a bullish bearish engulfing, but it's not marked here. Right here it's a bearish engulfing, but also this is a bearish engulfing. Here you see the first candle is overtaken by this red candle. This is bearish engulfing. This is also B. So this trading indicator is not that good, right? You can't just rely on that, right? So this is a bearish engulfing, and that is the again after that price has gone down a bit, right? And after that, at this support level, this is a spinning bottom actually. I mean, that doesn't actually means anything, but again at this support level you can see the price has gone down because this is our previous resistance. This was our previous resistance, and the price bounced back from that level. Again the downtrend has started. And this is also a bearish engulfing. I hope you understand the bullish engulfing and bearish engulfing. So bullish engulfing is when the second candle is green and bigger than the first candle, and completely the price action of the first candle is reversed. Here the bearish engulfing means the second candle is red, and the price action of the first candle is completely reversed by the second candle. So that also marks a potential reversal, right? Okay, another one we can see. So this is actually very common, but not that strong. That's why I have this 2-star rating, because this has like moderate strength. So you might see them a lot on the charts. So this dark cloud and dark cloud cover and piercing line looks like this. This is a dark cloud. Dark cloud is bearish, right? So dark cloud means you see the first candle green and the second candle closes below the midpoint of the first candle, right? So the second candle is this, no? The opening price of the second candle is this, and the closing price of the second candle is this, right? And the midpoint of the first candle or the 50% level is this. That's the midpoint, right? And that second candle has closed below that midpoint of the first candle. So that's called a dark cloud cover. That is bearish. That means a dark cloud means sellers absorbed all buying and pushed below the 50% of the candle one. That's bearish. This is okay to use to confirm a continuation of a trend, not a reversal. Okay. Also, this piercing lines is the opposite one. This is bullish. Piercing line is bullish. Piercing line means this second candle closes above the midpoint of the first candle. So in the first candle, the midpoint is this, no? This is the opening price. This is the closing price. The midpoint is this, right? And the second candle closing price is this, above that midpoint. This is the opening price. This is the closing price, right? That is bullish if it closes above that 50% level of the first candle, and that basically means buyers absorbed all selling and pushed above the 50% level of the first candle. That is bullish, but it is not that strong. Okay, it's like a moderate strength. It has moderate strength if you are looking compared to the other candlestick patterns. Okay. Another two candle pattern is this harami. Harami is like opposite of the engulfing. Here it's an inside candle, right? The second candle is an inside candle. In engulfing, what do we see? The second candle is bigger than the first candle. Here, the second candle is smaller than the first candle, and it's an inside candle. Inside candle means it is trading with this within this price range of the first candle. right? It's a smaller candle. The second candle is smaller. If bullish, the second candle is green, that is a bullish harami. Right? If the second candle is red, that is a bearish harami. This is not that all. This is not strong, right? This is actually weak. That's why I have this 1-star rating. So you may actually spot a lot these type of candlestick patterns on the chart, but they are not that strong. Okay, they are just weak, right? But if you use with other supporting tools like support and resistance line, and if you have like very strong indications from the indicators, then it can be strong, right? But still, if you take it as a standalone candlestick pattern, this is weak. The haramis are weak. Haramis give us weak signals. Okay. I'm not going to look at them on the charts because these are like very common. You can look at them on your own as well. These are like very common ones. Engulfing is very common. The harami, these dark clouds are and the piercing lines are common. These are also common. So these are 2 candle patterns, right? And we also have 3 candle patterns, right? So up to this point, we discussed about single candle patterns and the 2 candle patterns. And there are 3 candle patterns as well, right? Is it boring? So the morning star and evening star is looks something like this. The morning star what happened is you see a doji at the middle. In doji, you have a flat body. So this doji is at the middle. It's like a common candle. This is the opening price. This is the closing price. This is the high. This is the lowest price point, right? And this is a strong bullish candle. You see like a moderate wick, moderate shadows, and a big body, right? So this is a bullish candle, and the second candle is this doji, where you see an indecision, right? And the following candle is red, right? That is our bearish confirmation. So that is this is a chart pattern. This is a candlestick pattern that marks a potential reversal of the uptrend. That means it can be the start of the downtrend. So this is usually you might see this in the top of the uptrend, right? In our previous cases also. Yeah, this is not this one. So, so there are some other rules as well. So this second candle should be within this first candle. That means the red candle or the third candle should close below the midpoint of the first candle, right? So in the first candle, the middle point is this, no? This is the midpoint or the middle point, right? And this red candle need to close below that point. Here you can see the price has closed below that point, right? So this is a confirmed evening star, right? Okay, so that's is explained here also, right? And in this case, this is bullish. If you see the third candle is green, that is bullish. In here, if you see the third candle is red, that is bearish, right? In here also the morning star also you see the middle candle is a doji, right? The flat body and the closing and opening prices are same, right? So the middle candle is a doji, and the third candle closes above the midpoint of the first candle. So this is the midpoint of the first candle. By midpoint, what I mean is the middle of the opening and the closing price, okay? Not the high and the low price. the body, middle of the body, right? Basically here. And this one closed above that now, right? So this is a morning star. Let's see if we can spot it. Think I marked some. Let's go to the daily chart. All right, let's go to XAV. Okay, this is a what is this? This is a morning star. Right? Looks like this one. Second one is a doji. The green one, the third candle closed almost at the half point, right? Midpoint of the first candle, right? So this is a morning star. I think I also have another morning star. Let's see somewhere. What is this? This is a shooting star. This is a inverted hammer. Here dojis. Here a doji. Here. Right. This is also a morning star. Right. This is a like very good signal. Right. You can see the price movement after this now. Here. Look at that massive price movement. So this is a morning star. Let's take a closer look. Second candle is a doji. The third candle is above the midpoint of the first candle. First red candle. Here it's about here. Midpoint is about this much, right? The third candle closed above that point, and the second one is a doji. So this is a morning star. These are like very strong candlestick patterns. Okay, so this morning star and evening star are very strong candlestick patterns. You can also try to spot these evening stars on the chart. I think maybe so. It usually is at a top of a trend, top of the uptrend. Here it's a spinning top. Engulfing, bearish engulfing, right? This is not really a evening star. Here is this a evening star? Yeah, no, this is a evening star. I mean, you don't need to remember all these names. Just if you can remember the main ones like we discussed earlier, like dojis, shooting star, the single candlestick patterns that occurs at the end of a trend, that is actually enough. You don't need to remember all of them. I mean, there are like a lot of candlestick patterns than we discussed, right? These are not all the candlestick patterns. There are like many other candlestick patterns as well. We are not going to discuss all of them. So this one is a morning star. Sorry, evening star. Like this one. The second candle is a doji. Almost opening price and the closing price are same. Right? Almost, not exactly same. And the midpoint of the first candle is about this much now. And the third candle is closed below that. I mean, if you want to like really identify the midpoint, you can measure this. The body you can measure. like this, 50%. No, you can't measure it like that. No, you can't do that. You can actually do this retracement. This is the 50% level. 0.5 is the 50% level. And the third candle closed exactly at that point, right here. So this is also a evening star. And the price has gone down from that point. So evening star is bearish, morning star is bullish. Right. And also here also it says no, at significant, you have to spot these on significant price levels. That means if you can spot a morning star at a support level, then that confirms then that only gives us a strong signal. Okay, and that is also one of the strongest reversal patterns, this morning star and evening star. Okay, so what do we have next? Okay, so this is not very rare. This is, you can spot them on the charts, right? So these ones are called soldier, three white soldiers and three black crows. Right? This is not a reversal pattern. This is a continuation pattern, right? So this tells us a bullish continuation. If you can see the three white soldiers on a chart, and if you can see three crows on a chart, that gives us a bearish continuation signal. That is not a reversal. That basically means that the current trend can continue. That is what meant by the continuation. Okay, so this three white soldiers are like same size candles, the three candles in a row, right? And you can see the rules here, right? Three successive large bullish candles, that means green candles. Each candle closes near its high, right? That means they have short upper wicks. Short upper wicks. That's what this means. Each candle closes near its high. That means this is the closing price, no? Sorry, this is the closing price, no? This is the high. We will actually look at them in a chart, and that gives us the continuation signal, bullish continuation signal. The three pros are like opposite of the three white soldiers, right? But the sizes and that these three candles are at the about the same sizes, and also closes near its low. That means they have they have short lower wicks. I think I have marked some three crows and three white soldiers. Let's see. Okay, this looks like three white soldiers, but the sizes are somewhat different. Uh, Okay, I'll try to find them when I have time. So until then, okay, I'll try to find them later. Okay. No, can't see that. Okay, so anyway, this is actually a continuation signal, not a reversal signal. Okay.
So for the timing, gold market is on the support level or in the morning star level?
So it has found some support at this level, but the trend is still down. Right. Here you can also spot that doji here. Here is a doji. So this is a good support. We might see a trend breakout, but we cannot confirm it yet because it's a downtrend. So basically this is a support level. This is a very good strong support level. We might see a breakout, but I'm not sure. We'll have to wait and see. So if we see a like green candle close above this level with high volume, then probably we might see the price is going again back to this level. If we see some movement like
Is there is any possibility to be again go downtrend, evening star?
sorry,
There's a possibility again this goes to the evening star level.
evening star. You mean gold to go down below this
Yeah.
level?
Yes.
Yeah, I mean you also have to look at the fundamentals, right? So now the war is over, right? The Iran war.
Yeah.
So the uncertainty is low, right? And if the interest rates, the US Federal Reserve raise the interest level in the next meeting, then also that could go down. The prices could go down further. Yeah. So again, we might see some. This is a resistance level, so we might see some selling pressure coming at this level also, 4,300. Anyway, the trend is down. The upside breakout from this downtrend, we have to assume the trend is down still.
That's perfect. Yes, sir.
Only we can close above this level with high volume. Then only we can say the price could go up further. So now actually we are looking to so I personally look into enter into short positions, not into long positions. So this is actually my preferred position of entering into a short trade. Right. So we'll discuss this Fibonacci levels in a bit when we discuss about the support and resistances. So basically you can draw a Fibonacci. This tool is called Fibonacci. Here you can select the third tab, and you can see Fib retracements. So now the path is like this, no? The path is like this. Right? And the immediate previous lower high. So this is a downtrend. This is a lower low. This is a lower high. This is a lower low. This is a lower high. Again, this is a lower low. This is not a lower high. This is not. So this is the immediate lower high, right? Before this downward move, this is the immediate lower high. So that is what we call a swing high, right? So if you draw a Fibonacci retracement, you can draw a Fibonacci retracement from the swing high to swing low, right? Like this. This is the swing high. This is the swing low. And this 50% level of the Fibonacci retracement, I'll move it somewhere here. So this still can't see it. Okay, I'll extend it here. So here in the Fibonacci retracements, you have levels. So this is a 23.6% level. This is 38.2% level. This is 50% level. This is 61.8 level. This is 78.6 level. So from this total move, we can consider it a 100% move. Then there are like levels, right? These are like percentage levels. So in a downtrend, I prefer to enter into a short position from this range, from 50% level to 61.8% level, right? So this range is a very good opportunity for me. That is actually my strategy. This is actually a also if the price get closer to this level, that also means the price is approaching this trend line, right? So this is a very strong resistance level. So I can actually expect the price to go down from this level. So I prefer to enter into short position from this level. And I might able to target this level also from this point to this point. I can catch about in gold, you are like catching very minimal percentage gains. Here about 5% gain if I short. Right? That is my strategy actually. Okay, so we'll take a short break and then we have to discuss about point and figure charts. Okay. Okay. We'll be 340, 340, 355. Be back at 355. Get a 15-minute break. We'll be back at 355. Guys, I will upload both session 3 and 4 by Monday. You can also refer to this chart. So this is like a summary of the charting, the candlestick patterns and the strength, right? And also try to spot them on the charts by your own. So, I mean, for everyone, every candlestick pattern, I have rules here like this. So you can try to spot them on the charts by your own and try to see. I think I have this here. This practice activity, you can do this on your own, right? Basically, try to identify the candlestick patterns, looking at what I have given you, and also look at where that pattern occurred, right? Is it after an uptrend or after a downtrend, and is it at a support resistance level, and also confirm it with the subsequent price action. So if you spot a shooting star in an uptrend, right, then after spotting that, the subsequent price action should be to downward, right? Price should go down after the shooting star. Like that, you can do this short activity, right? Okay. So in this session, what we have discussed in detail was that candlestick pattern charts, right? And the candlestick charts and the candlestick patterns, right? Then we also have another chart type called point and figure. Wait, think simply some point and figure charts, right? So this point and figure charts, also you can select that by changing the chart type. Okay. So here, this is where you can change the chart type. So here, if you click on that, earlier we discussed about bar charts, right? And also we discussed about line charts. And I told you these candlestick charts are the most important one when we are doing the technical analysis. And we can also choose this point and figure charts. The point and figure chart looks like this. So X means the price has gone down, gone up. Zeros mean the price has, not zeros. O's mean the price has gone down. Okay. I think since I have the free version of this trading view, I don't really. So this is from 1080, 18. Sorry, what is it? 18. This is from 18th century, not 19th century, right? 1800s, right? In 1833, right? Yeah, 1833. And from 1833, you only see this chart in point and figure. This is the whole chart from 1833. And in 2011, here it's 2011. And here this is 2026. Right? So here the difference is in point and figure charts, they don't really stick to the time frame, right? So basically here there are like boxes. So this is one box. Wait, I'll mark. So this is a box. And in a box there can be a X or a O, right? So these are boxes and these boxes are same size. We have same size boxes. This is also a box. And if you look at the price difference of that box, it is same across all the boxes. I can't mark this box now. Yeah, I'll just copy paste this. Okay, so these are boxes, and these boxes are same sizes, and in the boxes there can be X or 0. Okay, and the box size is here in gold chart. The box size is about 100, I think. Here it's 4,000. The high is 4,700. 4,050, I think. Right. Here it should be, let's look at here, 4,250, 4,150. So here the boxes are about 100 USD. That means the price difference of a box is 100 USD. Right? That is for the gold chart. So for other charts, the size of a box can be different. Right? So there are like boxes everywhere, and within a box there can be excess up during this price interval, right? Not the time frame. We don't refer to time frames in what do you call this box and point and figure charts. We don't refer to time frame. We only refer to price range. So one box or one X or O represent 100 USD price difference, right? 100 USD price movement. So what does this O means? The price has gone down by 100 USD. And what does this X means? The price has gone up by 100 USD. And when we actually wait. So when we actually prepare this point and figure charts, the boxes are marked 100 USD to 100 USD, and the reversal are marked when the price, there are like 3 boxes, there should be reversals up to 3 boxes. Then only this price reversal is marked. I know this is not very, very straightforward, but still there are like ways we can use these point and figure charts. Right? So let's look at the presentation. I'm not actually very familiar with these point and figure charts because I'm also not using these point and figure charts, right? So here we also discussed earlier, we don't refer to the time frame of the point and figure charts, right? And there's no volume on the charts. The only detail we can look at is the price, right? Price differences, and the box here is 100 equivalent to 100 USD, right? So when the minor price fluctuations happen, that means let's say a price movement of 50 happens in gold. So then that is not marked. So they are like ignored. Only when 100 USD move is happen, only when there's a 100 USD move in gold, that's only when the price is recorded in the point and figure chart. Okay. So if there's like a $20 move, then it is not recorded. So basically, if there's a 20 move, we should at least wait for a 100 move to this point and figure chart to represent that. Okay. So here basically what we are seeing is the price action, and we can actually get some buying and selling signal using from these point and figure charts. Actually, that is that is actually important, not how we form this point and figure chart, right? And also I said X is when the price is going up, O is when the price is going down. Here in this case, O means the price has gone down by 100. Here, if you look at like, if you count like 5 boxes, that means price has gone down by 500 USD, right? And if you count like 5 X's here, then that means price has gone up by 500 USD, like that. Yeah, okay. I'll just also explain how this chart is drawn briefly. This is not that important. Okay. So when So let's say in this case, the price was going up. No, here in this case, the price was going up, right? I'm marking this one. In this case, price has gone up. But then when the price reverse the current trend, so here the trend is the price is going up. No, when price start to reverse that trend, the move is marked only when there's like a 3-box move to the downside. In this case, there should be a 300 decline, 300 USD decline in gold. When after that 300 decline occurred in gold, right, then only this come into display. This 3 O's come into display when the price has already gone down by 300 USD. So at this point, that means after, let's say the price is at 4,500, here the price is 4,500. When the prices go down to 4,400, this zero is not there. When the prices go down to 4,300, still the zero is not there. When the price is gone down by 300 USD, that means if the price has gone down to 5,200, then there will be 3 O's marked in the chart. That's how this chart is formed. Okay. So what's important is how we actually make a decision based on the chart, right? So let's look at that. Okay. Okay. So there are like many type of trends and signals we can get from the point and figure chart, but most important one is the, so I'll actually switch to a different chart because we have like very limited X's and O's here. No? I'll move to GBP USD because these are trading in the same range. There should be like a lot of price movements like this, right? Here the boxes are different. Here the box means maybe point, I don't know. Anyway, the the size of the boxes are same and the price range is also same, right? So the two types of signals we can get, the main one is called double top. So main ones are called double top and double bottom. This double top buy and double bottom sell, right? Double top buy is something like this. So here you can see a column of X's, right? That means the price has been going up. If you see a column of X's, what does that mean? The price has been going up, right? And then you see a reversal by a column of zeros, right? And the subsequent column after this one, after this reversal, if you can see another column of X's where the previous price movement, here the top of the previous price movement, and the subsequent one break past that level. Here the breakout X, here it's the maximum price it has reached before, right? And after the reversal, again, the column of X's or the price has gone past this level. So this is the breakout X. This is not called a candle. This is called a breakout X, right? This is the breakout candle, not the candle, breakout X, right? So this gives us the double top buy signal. This is called a double top buy signal. So in this case, let's look at the chart, right? So let's see a double top buy signal. Okay, here. Here, look at here, right? Here you see column of X's and the price has reversed, but again the price has failed to pass that level, right? Failed to pass that level. Here the price has passed that level at this point, right? So that's a breakout. What double top means is something like, yeah, okay, something maybe, yeah, here also you can say that this is a double top buy signal because this candle, the previous let's mark it as 1. This is the column I'm referring to, right? This is the resistance, right? This is the second column where we see some reversal. Oh no, let's look at this one. Okay. This is where we see a reversal, and here you see a breakout from this column of excess, the first column, right? And this is the breakout candle. This one is the breakout X. So after that, what we can expect is the price to go up like this. And here also price is moving in a trend. You can also mark a trend like this. Like that also, you can get, this is called a double top buy signal. I mean, these are like everywhere on the charts. And for gold, sorry, for GBP, I'm not sure how strong that signal is. But here also you can see the top breakout, but the price has come down to this level and then went up, right? So this is not many people use this, okay? So you don't actually need to use it, but you have to understand what this point and figure chart means. And the only chart patterns or the signals we discuss in the point and figure charts are these two, but there are like other signals we can use on the point and figure charts, but it's not that important for us. So we are only discussing these two. And the double bottom signal is something like this, where you see column of O's, where the price is going down continuously, and then you see some reversal. That means price is going up. That's what this X means. And again, with the third column, you see the previous first column, the minimum price point that during the first time it has reached here, no? And the third column break past that level to the downside, right? Here is the breakout O, right? So that gives us a sell signal. Yeah, this is a sell signal, but it's in an uptrend. So here it's a sell signal, right? Here you can see the column of force, market one. And you see some reversal. Then again, the price has break past that level. So the price has gone down from that level. Like that, those are like two main ones we can use in point and figure charts to get some buying and selling positions. Right? We are not going to discuss more on that. Okay. If you are interested in point and figure charts, you can also do some research on your own. I mean, there are like a lot of free videos on YouTube. I think for point and figure charts, actually, there are like less content, right? Because not many traders are used to this. I don't know anyone who's using this, but you can get some understanding of this if you look at some free content on YouTube or something, right? So with that, we can conclude our session 4, but I will discuss about the support and resistance. That's in my 5th slide. So we'll discuss about that too. But here we have learned is the candlestick charts and point and figure charts and the candlestick patterns. So out of all of this, what's important is the candlestick charts and the candlestick patterns, right? The line charts, the bar charts, the OH, or the point and figure charts, those are not that important, right? You have to look at the candlestick charts and the candlestick patterns. And out of the candlestick patterns also, there are like important ones. That's why I have rated here. These 3 rating ones are the most important ones. If you can Even if you don't remember the exact name, if you can keep in mind how the setup is formed, right? That would be important for you, right? So that's all about this slide, the fourth slide. Sure. So I'll move on to the next one. Here, what we'll discuss is the support and resistance in details, and we will also look at how we can actually build a trading strategy and actually build a trading strategy with all the tools that we have learned so far, right? So up to this point, we have discussed key concepts like the Dow theory and trends, trend lines, channels, and chart types and properties. Out of these charts, you only need to focus on this. Where's the candlestick? Here, there should be candlestick charts, right? Here also you can see out of all this you need to focus on the candlestick charts, and these trend lines and channels are also important. And now we are learning about the support and resistance, and we also discuss about the trade planning, how you can actually execute a trade with a proper plan by using all the tools we have learned so far, right? So what is a support level? Guys, do you have any questions before we move on to this one? What's ATR? Chart decided based on ATR. I actually don't know. I'm not actually familiar with point and figure charts. Average true range. What's that? I mean, you might have a good idea about this one, no? Point and figure charts. I'm sorry, I'm actually not familiar with this one. Anyway, the box size is different from instrument to instrument, but I don't know how is that calculated. Actually, we don't need to actually focus on how the box range is calculated. We need to focus on this trend lines and the breakout signals we can get from the point and figure charts. And even also, if you look at the indicators, there are like very mathematical ways of calculating these indicators also. But it's not that important to us as a technical trader. We only need to interpret those price movements with the technical indicators. We don't need to know how to actually calculate those things. That's another thing. Okay. So we'll proceed to support and resistances. Okay.
Hello.
Yes.
Can I ask a general question? In Sri Lanka, a person by learning these techniques, can he get profit from the trading? By doing this trading, a person, if he are skilled on this techniques, can he get profit from trading?
Okay. So there are like traders who trade in the long time frame just by looking at fundamentals, right? So if you're like a long-term trader, the fundamentals should be enough. And if you are like a short-term trader and who trade with leverage, so there are like a lot of people in Sri Lanka also, and myself also, I trade with leverage because a lot of retail traders use it leverage because they don't have like a lot of money like institutions, right? So they need to borrow and enter into trades. And for them, the technical analysis is really important. And in Sri Lankan stock market also, you can also explain all price movements by looking at technicals. And actually the stockbrokers use technicals, right? And the unit trust and who are actually in the trading desk actually use these technicals, right? So I actually worked in a stock brokering firm previously, so I know this, right? They are used to do the technical analysis. And when the people execute traders, they actually use technical analysis along
Okay.
with the fundamental analysis.
Okay, I asked this question because I heard from India. India's the government, the SEBI report says that out of 10 traders, 9 traders are losing money.
Yeah,
So
so that's
how
actually
about in Sri
that's
Lanka?
true. Yeah, so it's actually like this. So when it comes to trading, I also know that the 90% of retail traders are in losses, right? Because because a lot of the retail traders don't have the discipline of discipline of executing a successful trade. So I myself also have been in losses for many years. To develop that discipline to execute a trade with proper discipline, it takes years of experience. So now I'm trading in my 6th year, and I've been profitable about last 2 years. So that's a common fact for a very short-term trader, not for long-term traders. Okay, so that is true when it comes to the retail short-term traders, not for long-term traders. So there are like people like Warren Buffett. What do they look at? They look at the fundamentals. They are targeting value companies for the long term. So that's a very good investment strategy if you have a lot of money, right? You need a lot of money to make money, right? And when it comes to retail trading, the retail traders use leverage, right? When they are using leverage, the risk is higher. So that's the differentiating factor here. So that's actually true. When it comes to retail traders, 90% of them are in losses. That has been true for many years.
Okay, thank you. So from the experience in the after many years, we can win, no? We can win. No?
I mean, if you don't use leverage, then your risk is lower. I also explained that in the previous session, I think. If you use leverage, right, the risk is higher. That means if you borrow and invest, the risk is higher. But if you are in a profitable trade, then it's beneficial for you. But if the position is losing, then the risk is actually higher. So if you like trade with your own money, just the spot trade, that means you don't borrow and invest, then you can't actually lose. I mean, I also explained that DCA strategy, no? So let's say in a situation where the price is continuously going down, right? But you enter into buy position. Let's say you have planned your trade like this. You have planned to execute your trade in 5 occasions. That means you buy some amount when the price is going down, and you again buy at some amount of shares when the price is again going down. Basically, it's DC. It's called DCA. I don't know if you have been there. It's called a DCA strategy. Basically, it means you are buying at lower levels when the price is going down. Then your average price is somewhat lower than the previous market price, and you just need to get a few percent of upside to break even. And with that, actually, you can become profitable even without any technical knowledge or any fund. You actually need to have some fundamental knowledge. Even without technical knowledge, you can actually benefit from a strategy like DCA. It's called cost averaging strategy. Even when the price is going down, you buy at lower levels, then your average cost is going lower. Then you need just some little upside to break even. That is a very good strategy that most of the people in Sri Lanka also do. For that, you don't need technicals. Right? You just need to look at fundamentals and select a good company. And you need to convince about that company by looking at the fundamentals. You need to look at their valuations like PE, PB ratios. Maybe for a bank, it's PB ratio. I think you guys learned that, no? In fundamental analysis, the price to book value
Yes,
and
yes,
the price to
yes,
earnings
yes.
multiple, yeah, the multiples, and that's the easiest valuation detection you can get, the ratios. And I think a lot of stockbrokers continuously do their updates about the valuation ratios, right? Yeah. So when it comes to margin and the leverage trading, is the when it comes to those type of trading, is the when it comes to those type of trading, the risk is higher. Otherwise, you can't be, in a losing situation if you are just trading with your money. Okay. And still, it's better to have a good technical understanding to, get a better trading position, better trading opportunity. Here also we have, in the ASI also, still we need to see a break pass of this trend line. Right? This is called a symmetrical triangle. It can go to either side, upside or downside. Still waiting for the breakout. So we were discussing about support and resistances. No? So I have actually discussed it briefly with you guys before. Okay, so in ASI, let's mark in ASI support and resistance levels. So when it comes to support and resistances, there are like 5 sources how we can draw the support and resistance line. So one is we mark the previous highs and lows. That basically means in ASI, if you look at here, this is the previous highest point, right? This 24,000 level is the 24,000 level is the highest point that ASI has reached, and it is a resistance level, right? Here you can see the price reaction. The price has reacted. How many days? 1, 2, 3, 4, 5 days, right? On different occasions, the price has reacted from these place, which is the resistance. That is one source. We mark the previous highs and lows. Also here it's a previous low. If you are like, if you are marking like uptrend, this is a low, this is a higher high, this is a lower high, right? Like that, this is also a previous high. And that is also, at this point, it's a resistance. Here, the price has reacted multiple times. If you are here, the price has bounced back up from that level. So this is a support at that point. Now since the price is below that level, now it's a resistance. So like that, we can use previous highs and lows for marking support and resistance lines, right? And there are like other sources, we'll discuss them in detail, right? So let's look at what a support is. Support means a price level where buying pressure is strong enough to prevent further decline. That means just think of like if you have like a ball, when you drop the ball will go down to the floor, right? And will bounce back from the floor. So the floor is the support, right? Because the floor prevents the ball going down further, right? Same as that, when the price approaches a support level, that means the price is declining, the support level provides some support and the price bounce back up. So that is a support level, right? Here, if you can see, when the price is going down to this level, price is bouncing back up, right? Again, when the price goes down to this level, price is bouncing back up. And eventually the price has broken out from that level, then that becomes a resistance, right? Until that point, this is a support. Here also, when the price is approaching this level, it has gone up, but at this point, we don't see another reaction. So this is not a good support. Rather than looking at ASI, I think better to look at stock. Here also, you can see the supports. The price, when the price is approaching this level, the price is going up. When the price has gone down from that level, this becomes a resistance. And the next time when the price approaches that level, the price is rejecting that price point. That's what's happening now, right? This is on 26th June. The price is rejecting this level. Now this is a resistance. Right? We need to clear breakout from this level to level for the price to go further up. So this resistance is something like the ceiling, right? Okay, let's look at what creates this support. So there are like three traders who are creating the support level, right? One is a trap seller, and the other one is a profitable long trader, and also the traders who miss the move buying in. Let's look at a stock. Okay, so now in commercial bank, the price was in an uptrend, right? From this point, the price was in an uptrend. I mean, still you can draw uptrend line like from here, no? Right? And now the supports, I'm marking a support level, right? So this is a resistance level. It's a previous high. This is also a previous high. And this level, we see price reactions from this level, right? Because when the price is approaching that level, price is rejecting, right? So what's the support? What's the next support? The next support can be this level. Here there's a support. Here also there's a support. These things I have marked here is called the horizontal supports. This is a trend line support. So there are like many sources of the trend lines. Sorry, many sources of the supports now. One is a previous high and low, then again trend lines, and also moving averages. We haven't discussed moving averages. We can probably discuss them in the next session. And the horizontal price levels. These are the horizontal price levels. These four are the horizontal price levels where we see some price reaction. Right? So the immediate support I can say for commercial bank is like somewhere here in the daily time frame. Okay, so there can be different supports in the lower time frames. If you look at like 4-hour time frame, there can be other support levels, but in daily time frame, the horizontal support I see is at the 205 level. So what creates this support, right? What creates this support? The trapped sellers. One type of them are trapped sellers. How does a trapped seller create this support here? Let's say a seller or a margin. Let's say in margin trading, there are like people can short now. Here, someone has shorted the stock at this level below this point, right? And they are in losses when the price goes up. So let's say someone has sold or enter into a short position somewhere here. Then when the price is going up, they are in losses. When the price is going down only, they will be in profitable trades because they have shorted the stock, right? If they have shorted the stock, when the price is going up, they are in losses. So they are now like very scared, like the price could go up furthermore, right? Then they will try to close their position at higher levels. That's how this support can be a exit point for trapped sellers, right? That's for the trapped sellers. And the other type of people who are creating this support is the profitable long traders, right? So how do they create this support level? When profitable means they have entered into a long trade before like long time before this, right? Before this downward move happens, like somewhere here, right? So if someone has entered here, when the price has gone up to this level, they were in massive profits, right? If they have entered here, still when the price is going down to this level, they are still profitable. If you have entered like at this point, right? And this point, you don't take the profits when the price has reached this level. But when the price has reached that going down to this level, you are still in profit, but the profit is lower than before, right? It's like it's unrealized profit, no? So that profit is getting lower by lower when the price is going down. So they will also be scared that the price might go lower more, right? They will also try to exit at these lower price levels. So they also create that support levels. Right? This is not actually important. I mean, I'm just explaining how these support levels are formed. The other type of traders are who creates these support levels are the traders who miss the previous buying opportunity. These are like different situations of different type of trader, expectations create these supports and resistances. So let's say, so earlier what we discussed was the trader who entered at this position. So there's another trader who missed that opportunity. They are entering into the market now. So now they see this massive movement and they see this trend line, and they see that the commercial bank is still in an uptrend, right? Like that, they might also try to enter at a lower price level, right? Like this, they might also try to enter at this trend line level, right? That also create another buying pressure from another type of trade. Right? So altogether, these traders can create support levels, right? Like that, the different type of traders with different, the psychological expectations create the support and resistance level, and that's why these are like very predictable. There are like very predictable resistances and support lines on the charts, and that's why we can actually do the technical analysis because it's predictable, right? So those are the three traders who create the support. And when it comes to resistances, that's also same. These type of traders create the resistances as well, but the situation is different. Here the trap sellers, here it's actually the trapped one are the buyers at prior high price levels. So let's look at a resistance level. So there are like resistance levels here. No? This is a resistance level. This is a resistance level. No, the immediate resistance is here. Immediate resistance is at 2011. Sorry, 211. Right, that is the immediate resistance level. So here the trapped one are the who traders who bought the stock at this level. Right, when the price is going down, they are in massive losses. Right, but the price is at here now. At here right now it's about 208 now. When the price is making another move to the upside, now they are like scared that the price could go down further, so they try to exit their position. So those are the trap sellers, right? Sorry, trap here in the resistance line it's called a trap buyer. I mean, these are not, you don't have to keep in mind all of these, right? You just need to identify support and resistance lines. You don't need to understand how it's created. Here it's a trap buyer who is looking to exit their position, and there could be like traders who missed the previous shorting opportunity. Here it's right? So earlier, as we discussed again, so let's say someone who bought the stock at here, then they could book their profits at this level. Now the price is going down. They might again, sell their position, try to sell their position when the price is going up a little bit, right? Like that, there are traders who miss the previous selling opportunity or shorting, and there are profitable short traders. Right? So the profitable trade short traders means, let's say someone has shorted the stock at this point. Now they are in profits, right? So they might expect the price to continue to go down further, right? They might also add to their shorting position by selling here, by shorting from here, right? Like that, these all traders create this resistance together, right? Okay, so what's important is marking these levels. So I'm going to let's look at the time first. 4:42. Actually, this is a very good question. So that's why there are like concepts like ICT, right? Chandana, have you heard about ICT? So it's called inner circle trading. So in there, we look for the liquidity sweeps, like the ones you are mentioning, like these key levels. So traditional key levels are actually liquidity levels for the institutional buyers. So when I say this, I think others might not understand, but Chandana, you might understand it now. So actually, these are the support resistance levels that we mark on the charts, like the key levels. They are not like very good to place your stop losses or take profit targets, right? Because it can, for take profit targets, it's okay. I mean, for stop losses, you can't actually place your stop losses at key levels. That's why we usually place stop losses beyond or below the key levels. And if you are like interested in this, what you can refer to is the ICT trading strategy, right? ICD trading strategy or the smart money concepts. Like there are like trading strategies that use smart money concepts. That strategies use these liquidity seeds, the market structure breaks and those sort of stuff. So at this level, we are not going to go into them, right? I think Chandra has some good understanding about the technical analysis, I think. I mean, if you have time, I'll try to discuss about some advanced trading strategies like ICT, right? But that's like very complex ones, no? The smart money concepts and the ICT trading strategies. So those are like very complex ones. We are not going to go into them at this level. So basically, what Chandan says is that these key levels can be, liquidity points for institutional buyers. That's actually true. These key levels are actually liquidity. So if you mark this low point, right here, this is a liquidity level. So when the price approach that level, what happens in the real market situation is like this. In real market situations, price goes like this, then grabs the liquidity down at this level. It actually goes below the support level, right? And grab the liquidity, then goes up like this. So if you are like a trader who are trading using the support and resistance, it's okay for you to, place your entry point here, but if you put your stop loss somewhere like here, then you might get liquidated. You need to at least, wait for a liquidity sweep. Liquidity sweep means something like this. Here, you can see a liquidity sweep, right? This is a support level, right? And this one here, this one is called a liquidity sweep. Here, look at the price movement. It's about 180 to 170. That's a massive price movement, right? So if you think like this is a support, so let's say we are in November 27th of November 2025. So this is a previous low point. No? So I mark this level as a support, right? So I'm like looking into enter into a buy position at this level when the price approach that level. And your stop loss is about somewhere here, right? Let's say your stop loss is at this level. Then when you enter into the buy position from this point, and when the price approach that level, your position is liquidated. Then you are at losses, right? But your trade is correct because the price has gone up from that support level. But only after grabbing this liquidity here. So usually the previous high and low points act as liquidity levels, right? Here also you can see a liquidity grab because this is the support type. So this is the resistance I marked, right? Here this is a resistance level. But you can't actually enter exactly at this point because there could be a liquidity sweep or liquidity grab like this. In a resistance level, what you should expect is to price to go down like this, right? Let's say I mark this. So let's say price is going like this, right? So you might expect the price to go down from this level. But what actually happens is something like this. Right? It goes beyond this point, grabbing the liquidity like this one. Here, I have marked this resistance now. You can see the quick wick up, right? Quick wick to the upside like this one, which goes beyond that support level. Right? This is called a liquidity grab or a liquidity sweep. Right? This is a liquidity sweep which goes beyond the resistance line. But again, the underlying trend has remained, right? Because the underlying trend, the price has rejected from that level. Only difference is the price has gone above a little bit above that resistance level. Those are the liquidity grabs, right? So that's usually happens from the big traders, right? Because they have like massive positions somewhere up here. So there can be like liquidity sweeps like this one. In commercial bank, you see a lot of liquidity sweeps. Even here, this is a liquidity sweep. This one. It goes beyond the support level, but again comes back to the current price direction. Here also what could happen next is something like this one. And even something like this one. Here also there's a support resistance line, but it can go beyond that, but again come back down. If that happens, that's a liquidity grab, liquidity sweep. So that those sort of things actually we discuss when it comes to the smart money concepts, which we are not going to go into this course. Okay, so we discussed about resistance, right? Yeah, we discussed about that. So how we can draw support and resistance or the key levels, there are like few sources, right? one is a previous higher low, or sorry, higher previous high or a previous low, like I drew here. And again, you can also draw trend lines, and these trend lines, if you draw like a trend line like this can act as a support, right? But if you draw something like so this is right now it's consolidating in a horizontal channel. There's channels. Now it's consolidating, right, from this point. In this horizontal channel or the sideways pattern. This can also be support, and this is a resistance. Like that, these trend lines, or in an uptrend, that this can be the support. Discuss then in a downtrend. So downtrend, and this one. In the downtrend also, this can act as a resistance line. This is a support line in an uptrend. So trend lines can act as support and resistances. Also moving averages. There are like moving averages that we will discuss in the next session. There are like two main types, simple moving averages and EMAs, exponential moving averages. Those are also support and resistances. We will discuss that in the next session. Right. And also horizontal price channels that I drew earlier. So the horizontal pattern channel, horizontal at the charts, you manually select places. You can go to this trend lines or the the second tab, and select horizontal line or horizontal ray. Both are fine. If you select horizontal line, you can draw horizontal lines from where you see some price reactions. So right now I see price reactions at this point, right around this level. This is a resistance because price has rejected from this level when the price approached this level, right? Here the price has broken out from that level, right? But at this point the price is trading at this 209 level, no? But the immediate support would be around this level, and again there's a resistance at this level, right, where the price is rejecting from 2011.5 level, and the price is bouncing from this level, right? When the price approaches this level, price bounces, right? Here also price bounces. This is a support. I'll mark supports in green, resistances in red, right? So all the support resistance lines I'm drawing are based on the current market price. So if the current market price, right now the current market price is 209, so the immediate horizontal support would be 208. Immediate horizontal resistance would be 2011.5, and those are in daily charts, not in the short time frame. Okay, this is in the daily chart. And again, if the price has come down from that level, there can be a support level at this level, right? Because price is reacting this level at this level. Again, this can be the next support level if the price break down from that level. So let's say price is coming down. Price has broken down from this level, then price would go like this. Again, bounce from that level because there's a horizontal support level as well as a trend line support level. So this can be a very strong support because you can confirm by two sources, right? One is a horizontal support, other one is the trend line support. So that actually signifies the strength of this support line. Like that, there can be very strong support and resistance level. How we identify strong support levels and minor support levels, we also discussed that, right? I have a guideline for that also somewhere here. You can see how to identify stronger support and resistance level and weaker support and resistance level, which we will discuss probably next session. Okay, so what is this role reversal? Role reversal, even if you don't know the word, you know what that role reversal means. It's basically means when the support line is broken, if the support line is broken here, then it becomes a resistance when the price approach next time, right? Like that, that can change because these are key levels. Here, look at the price movement. When the price is moving like this level acted as a resistance level, right? But again, at this point, the price has broken out from that level. You see the price has broken out from that level. That means this previous resistance becomes a support level now, because price has been rejecting this level again, level before, but now the buyers managed to pass that level, right? And the selling pressure is now minimal, right? And when the price approach that level again, there can be many buyers entering at this level because the previously the resistance was broken, right? And the price could more like this. So this is what we call a retest, right? These retests are a very good position for traders to enter. Okay, and in this case, this previous so this is still a support now. At this point, this is still a support. Now the price is coming down, and when the price approach this support level, we can expect the price to bounce because this is a support now, right? And then price bounce, again price bounce, and then eventually the price has broken down from that level, right? So in the next time when the price approach this level, this is a horizontal. Sorry, this is a resistance, right? Because the support line was broken at here. At this point, the support line was broken. So the next time when the price approach this level, we can expect the price to go down from that level because this is a resistance. Like that, that is called a role reversal when the previous support becomes the new resistance, and when the previous resistance becomes the new support. That is the role reversal. So I think, do you guys have any questions? Okay, so smart money concepts. You have seen that liquidity sweeps on the commercial banks, right? So that I'm actually not trading Sri Lankan stocks, so I can't give you a like experience advice. But I think in Sri Lankan markets also it works. I only trade gold, so obviously in gold it works. It is actually the only strategy that works in gold, ICT or the smart money concepts. So when it comes to like very liquid, very efficient markets, that would be the way to go for the retail investors. Otherwise, it's very difficult for retail investors to succeed in a very efficient market because institutional traders are always, in always few steps ahead of us. So that's why we need to learn about smart money concepts. But when it comes to Sri Lankan market, also you can't actually trade in very short time frames. If you look at the stocks, like in 1 minute time frame, you can't even see a candle. Candles look like this. This is not a candle. No? This is not a proper candle. You can't trade Sri Lankan stocks in 1 minute time frame, or even in 5 minutes. Maybe you can trade in 1 hour chart. Yeah, you can trade in 1 hour chart. So even in that case, you see some liquidity sweeps like this, no? But this can be a support level. This is not a liquidity sweep. This can be a support level. But here you have seen liquidity sweeps like this one. If you mark a horizontal support level at this point, this is a liquidity sweep. So we wait for the trend breakout or a market structure shift or change of character. So this would be our change of character right here. And you have to confirm this trend breakouts with high volume. Do we see high volume at this level? Yeah. After the change of character, we see high volume.
Excuse me, sir.
Yes.
Is there any possibility that we can see the volume by numbers without any chart? Like
Volume
a
by numbers. I think you
percentage,
can. Yeah, in trading view, you can get it volume by numbers.
Is it possible
Sorry,
you to
not
show
on
that?
trading. Sorry, A-Trade. If you're using A-Trade, you
Yeah.
can look at the volume by numbers.
But we
Here,
cannot see
I'm
the
not
past
sure.
track, right? On A
Huh?
track, we can only see the day volume, right? Not the past volumes, right?
Yeah, I'm not also sure. So if you like click on, if you like point to this one, this is the trading volume. If you
Okay.
like point to this one, you see here, right? You see here volume, right? And
Okay.
when you point here, you see the volume. But I'm not sure if it's accurate for the Sri Lankan stocks, right? And better to look at on A-Trade, and even in A-Trade, if you point to this one, you get the volume here. I think you can view that on the chart and the price for the historical price chart as well. And that volume is both trading and both buying and selling volume, not just buying and selling volume. So this red one means the sellers have surpassed the buying volume. Otherwise, this is not like selling volume. This is not selling volume. Sorry. This is not selling volume in total. This red volume bar basically means that sellers have surpassed the buying volume. And this green one basically means buyers have surpassed the selling volume. And this volume we get here is the total trading volume. That could be buying and selling volume both. I know it's accurate in A-Trade, not sure in trading view for the Sri Lankan stocks. And even for ASI, you can't get trading volume on the, this trading view.
And
But on
one more.
A-Trade, I remember we can get trading volume on SPA.
Yeah. Another question, sir. So sometimes the volume spike a lot, but when it compared to the candlesticks are not spiked. Why is that? I mean, candlesticks shows a smaller limit, like a not a big range, but compared to that, the on the day the volume sum for has spiked a lot. Kind of a
Okay, so
controversy. Why is
yeah,
that?
that actually I need to explain by looking at a chart. Let's see if we can find a example. That actually depends on the situation. Right. Here do we see it's a massive volume and massive price movement. I mean, you have to look at other indicators as well, other indicators and other trend lines, you have to explain by looking at all of them. You can't just completely rely on volume as well. It's not massive volume. Even high volume doesn't mean that there could be a very high price movement, because the volume basically means both buying and selling volume. Buying, selling volume, right? But the price, if the candle is large, that means, let's say a candle, candle is large like this, and it's a green candle, just assume this is a green candle, that may basically means there are like high buying volume, right? But let's assume that both buying and both sellers and buyers are like, they have like equal pressures. That means buying pressure and selling pressure is same, but then the volume could again spike, but the candle could go, candle would be like smaller one, because there are like no like they are like equal buying and selling pressures, but the volume is high because both buyers and sellers are in the game. I don't know if you understand that. So volume basically means both buying and selling volume, no? But candle, if the candle moves up, that means buying volume is higher than selling volume. If the candle is going down, means selling volume is higher than buying volume, right? But what happens if the buying volume and selling volume are same? That's when we see a doji, right? That's an indecision. But in dojis also you can see high volume. So let's look at a doji. Here's a doji. This is a shooting star. Here's a doji. But in dojis also there can be high volume. But in this case, there's no high volume. Doji basically means there's no, there's an indecision between buyers and sellers. There can be buyers and sellers, right? At the, they are, giving same pressure, the same buying and selling pressure here. But the volume can be higher because both buyers and sellers are trading. I don't know if you have understood that. Oh, why is this? There are like 3 screens here. Oh, okay, now it's okay. Chandra, what instrument are you actually trading? Other sectors means? If you are like trading smart money concept, that discipline is very important. I think you know it by now, right? You have to stick to your trading strategy. If you like, go beyond that or try to do something else, then it's hard to stay profitable. Okay, so another thing I will discuss today is these round numbers as support and resistance level. So these are called actually psychological levels. So for gold, if you look at like gold chart, the psychological level would be like 5,000 level, right? 4,000 level, like that. There are like, this here also you can see it has rejected close to a, round number, no? 5,600, not exactly that, but maybe 5,500 level, right? Like that, these round numbers are like psychological levels. Why? Because if I like buy gold at this point, so let's say you are not a trader who has a sound technical knowledge, then you might expect to, take your profits at very round numbers, right? Like 5,000 level, like 5,500 levels. So those are levels. Also, we see some price reaction. So if you point to 5,000 level, maybe here, this is also a support level. You can see the price reaction here. The price has bounced from that level. This is actually 5,000 level. Here, this is 5,000. This is like, these are also key level. At this point, it is a resistance. But if you are looking from this point, this has been a support. This 5,000 level has been a support level. And also, where's the price now? 4,100. Okay. So I think this 4,400 level is also not 4,400, 4,500 should, yeah, this level. This 4,500, it is a round number, right? And it's also a support level where you see some price reaction. It's actually a resistance point right now. Actually, this level. I'll mark horizontal ray. This horizontal ray is shorter than horizontal line, like this. Right, this is the 4,500 level. You can see the price has exactly bounced from that level. Right. Again, the price has rejected that level. Now it's a resistance level. So these are like psychological numbers where like some traders prefer to take their profits or exit their trades. So those can be also support and resistance level, right? Like this round number 5,000, and for ASI, I think 24,000 is the psychological level, right? Yeah, this 24,000, you see the price reaction. So the whole market is crashing down from 24,000 level. So this is the psychological level in the ASI, right? Now we know where the price will be react. If the price is at like going up from this level, we can also expect another price reaction from 24,000 level, because it's a psychological level. Those are round numbers, and those can be also act as support. Yeah, humans naturally prefer to trade around those round numbers. And you can also see some repeated price actions from this this round numbers or the psychological level. Just remember the name. Even when you are doing technical analysis in writing articles, when we are writing technical articles also, we refer to them as psychological levels. We call them psychological supports or psychological resistances, right? These round numbers here in the ASI, 24,000 is a psychological resistance, right? So where would be the psychological support? 20,000 would be a psychological support, I think. Here you see price reaction, not exactly that. Maybe 20,000 is here. Yeah, here previously you see exact price reaction from that point. Here the price has reacted from that 20,000 level. So maybe 24,000, 22, 21,000. Yeah, right here 21,000 is also a psychological level, because these are like round numbers. Right. Okay, any questions? I'm going to end the session for today. We'll discuss how to
So
assess
is there,
yes. Yes, go
so
ahead.
is there any wallet or something in Sri Lanka that we can trade over
Crypto,
that
for
wallet?
cryptos.
No. I'm talking about gold.
Put foreign currencies, no? Right? Foreign
Gold
currencies.
trading. Gold trading.
So,
In Sri Lanka, how we can do the gold trade? In other countries,
trading,
we can see.
yeah, so in other countries there are ETFs, right? ETF means exchange traded funds. So there are like many in US, there are like SP and R or something like gold ETFs. So people actually invest through the exchanges. People can invest in gold through the exchanges in foreign countries. Here we don't have that. We don't have commodity ETFs, not employee trust fund. Okay, this is exchange traded funds. That means for commodities or even for unit trust also, you can have like no ETFs. So in foreign countries, they have that. In here, what you can do is buying physical gold, or you can actually trade futures of gold. So the gold future sticker is FAU USD. This is actually gold spot, I think. Yeah, gold spot. But you can trade this pair, right? There are like different exchanges. Actually, you don't need a wallet. You can directly deposit on some exchanges. I'm not going to say the names. You can research on your own. There are exchanges that you can directly deposit your rupees and convert into USD and trade.
Is there any? I mean, it is what do you call that? It's a mandate. Is there any mandate in Sri Lankan CDSL or somewhere to do that?
CDS? You don't need CDS accounts for trade gold.
No, I'm talking about central bank in Sri Lanka. It's a if we
right. So you're asking for a regulated? Is there a regulated exchange?
Yeah.
The thing is, these exchanges are regulated in other countries.
Other
in
countries,
Sri Lanka,
not in.
even the crypto exchanges are not regulated. At least, I think the thing is in where you can trade other instruments, you can also trade crypto. So those exchanges are not regulated in Sri Lanka, but they are regulated in other countries. So the ones ones that are popular in Sri Lanka also, they are regulated in other countries. But since there are no proper regulations in Sri Lanka, you can't, directly conveniently access those. That's the thing. But you can trade them if you do some research. I can't say them because they are not actually regulated in Sri Lanka. That's why I can't mention the names. So the central bank, what the central bank says now is trade at your own risk. If you are trading like other instruments like crypto and all the other futures and all that commodity stuff, even you can trade gold, oil futures, and you can also trade foreign stocks. The thing is, there's a foreign currency outflow, no? So for a country like Sri Lanka, that's also important. We can't actually afford to there could be like if you're like everyone is trading using foreign currencies, there will be a foreign currency outflow. We can't afford that. There are like basic needs, no? Here we have to have dollars for buying oil. I mean buying physical oil for the consumption. Like that, there are like basic needs, no? So that basic needs come first before the trading. That's why we can't afford to lose some foreign currencies for trading. I think that's why it's not regulated at this moment. So even for these exchanges, when you buy using LKR, that actually converts into USD. So that's a foreign currency outflow. Those are not regulated.
Thank you.
I mean, if you like go through trading, you can see the platforms. I mean, I'm not going to go there, but they are like very popular ones. But don't go into that plantation thing. I mean, this is now a very big case here. No? They're like වතු වලට සල්ලි දානවා කියලා investors ලාගෙන් සල්ලි ගන්න ඒවා like they are scams. Okay, don't fall into those things. So if there's an investment scheme that promises above market or very high returns, those are probably scams. Maybe a pyramid. Any other questions? I don't know that Watuaga, they promise like 20%. Right now, I think they maybe 30% gains on per annum basis. They promise like 30% returns per annum. Those are like very, unreal games and scams. So the easiest way that people can sell investment scheme is market that to that uneducated, financially financially not literate people. That's the easiest way that they can profit off from them. That's why from time to time there are like many investment schemes. So I remember there was on max DT or something, right? And those are like, so they market trading, but what actually happens is a pyramid scheme. That is not actually trading. So it's a pyramid scheme. If you look at closer, or look at their business model, firstly you can see a clear pyramid scheme. Okay, so then we'll end the session for today. I'll see you guys next week. If you don't have questions, but if you have a question, just let me know. I'll actually may put my, the personal phone number. I'll give my personal number if you have anything to ask, that you can, we'll discuss that. But I'll give that after the end of the course. Okay, then I'll see you guys next week. Thank you for joining.
Thank you, sir.
Okay, thank you.
Thank you.